Now it's time for the Voice for the Industry podcast.
Hey, Chris. This episode with Kemp Anderson Consulting with Grant and Kemp. I mean, if you are a pest control owner with some vision of maybe selling down the road, or you are a company looking to buy companies, or you just want to have a better understanding of the whole private equity thing and how all this works, this is a fantastic episode. I've known Kemp way back, but Kemp and Grant were presenting at the same state association I was presenting at a year ago. And they were right in front of me. And I thought, oh boy, these bean counters are so boring. I have to wait and sit through it. And I was fascinated. They did a better presentation than I did. Honestly, it was a better presentation than mine. So that's why I wanted to have them on here. It's really good talk. They know their stuff. Just great information.
Yeah, it was interesting for businesses to hear the tactics that they explained. And even if you're not considering selling now, just in general, things that businesses should know. It was a good episode.
Yeah, exactly. There's just good financial information for anybody that's involved in a business as well. All right, guys, go learn something. Watch the episode.
All right. Well, hey, everybody. Welcome to the Voice for the Industry podcast. Very excited today. I have Kemp Anderson and Grant Sanat from Kemp Anderson Consulting. Very excited to have you guys. Welcome.
Thank you. Excited to be here.
Thank you.
All right.
Yeah.
All right. Well, let me get started with some bios. Let me get a drink first because they're pretty long ones. So make sure my throat doesn't get dry. All right, here we go. We're going to start with Mr. Kemp. Kemp Anderson is a driving force behind Kemp Anderson Consulting, where he provides expert guidance to business owners, executive leaders, and private equity firms on mergers and acquisitions, M&A, divestitures, post-integration strategy, due diligence, and negotiation. With decades of experience in the residential and commercial services sectors, I won't highlight decades. Kemp leverages financial expertise, leadership skills, and firsthand ownership experience to help companies drive growth, maximize profitability, and successfully navigate the complexity of business strategy and transactions. His practical, results-driven approach stems from having owned and operated businesses himself, giving him a unique perspective on both day-to-day operations and long-term strategic vision. Before founding his consulting firm, Kemp held senior leadership roles across the industry as VP of Business Development at Scott's Lawn Service, which was a division of Scott's Miracle-Gro. He led all M&A activity, expanded service lines, and grew the franchise network to record results. At Rollins, Inc., parent company of Orkin, he spearheaded North American acquisitions and expanded the company internationally into Puerto Rico and the U.S. Virgin Islands. Earlier roles included driving growth at Middleton Lawn and Pest Control, and founding America's Pest Solutions and NotOneBug.com. Kemp began his career at Sears Termite Pest Control, gaining experience in operations, customer service, and M&A. He holds a bachelor's degree in political science and an MBA from Rollins College. Kemp and his wife live in Florida with their sons, and they also spend some time in Wyoming. All right. Well, welcome. All right. I have another bio, Mr. Grant Sanat. Grant is a quantitative analyst and data scientist with deep expertise in financial modeling and machine learning. That means Grant's really smart. For more than 6 years, he led quantitative analytics at Bank of America, where he managed multi-billion with a B dollar portfolio models, defended high-risk statistical models before regulators, and oversaw data science, and machine learning initiatives in the wholesale credit lending space. His work included guiding the bank's transition off Libor, L-I-B-O-R, contributing to the AI chatbot Erica, and supporting the Paycheck Protection Program during COVID. Prior to Bank of America, Grant worked in General Electric's corporate finance program and published economics research at the University of Florida. Grant holds a BA in mathematics and economics and an MBA in finance from the University of Florida. With a background spanning software engineering, financial engineering, and data science, he brings a rare mix of technical and business insight to clients. Outside of work, Grant is an avid outdoorsman and mountaineer with favorite climbs ranging from Patagonia to Yosemite. Grant enjoys fishing, hiking, and exploring the wild landscapes between Southern California and Wyoming. All right. Well, welcome, you guys.
Thanks, Grant.
Thank you. Thanks for having us.
I need a little break after that, but we're good. Yeah. And Grant, I live an hour from UF, and my youngest son lives like 5 minutes from UF. So small world.
Go Gators.
Go Gators, go Gators. Well, it's great to have you guys. I've known Kemp for many years. And I worked at McCall. We actually were involved in a couple of the same acquisitions. I met you, Grant, last year. You guys were at the Washington State Pest Management Association meeting in lovely Icicle Village in Washington.
Yeah.
And you guys presented right before me. And I thought, my original thought was, oh, it's a bunch of number crunching guys, whatever. But it's actually really fascinating stuff. So I'm really excited that you guys agreed to be on the podcast. I know you have some really cool stuff to talk about. The thing about our industry, as you guys know, is, over the last 6, 7, 8, however many years, it's all acquisitions, M&A. These big companies are coming in, paying more than they used to. So a lot of pest control companies, it's kind of the thing now, right? It's like you own a pest control company, but at some point you have to make that decision. You're going to sell it. If you're going to sell it, then what do you do, right?
Yeah.
So I'm just going to throw this out. One of you can answer, then the other one can jump in.
Sure.
What are the top 3 things a business owner should do or can do to increase the valuation of their business once they make a decision to sell it? Who'd like to take that one first?
I'll at least jump in and hit
Okay.
a couple of them. I think really when I think about the pest control industry for me and going back to how I got started, out of school in a truck running branches, when I got in it, I thought I was in the pest control business, and that might sound kind of like stating the obvious, right? We're in the pest control industry. We're running a pest control route. We're running a pest control branch or region or division or whatever, the company calls it. What I learned really quickly, and I kind of learned it by happenstance. When I was at Sears running running a branch, Chuck Steinmetz, who was the CEO and founder of Sears Termite and Pest Control, used to share P&Ls for every branch. He used to share what he thought were super important metrics. So, you could see a report that was revenue ranking by branch, renewals ranking by branch, who had the highest retention rates. It could be employee retention. And one of the things that I noticed, and again, I was sort of had these reports scattered on my desk, and I noticed that I had the profit ranking report. So it had the most profitable branch to the least profitable branch, sitting next to a report that was employee retention by branch, with the best employee retention to the worst employee retention. And they were sitting side by side. So I kind of went, I wonder how these things, do they intersect?
Do they correlate?
And they did. They did. Yeah. And what I found was the branches that had the best employee retention happened to have the highest profit margin. So one of the answers I would say, Raymond, to your question is one of the key value drivers is employee retention. And sophisticated buyers will want to understand everything about a company's HR, holidays, comp, what position every person's in, how long have they been in it. They're going to want to know every possible HR variable in HR metric. And it ties to that employee retention rate, ties to customer retention, and it also ties to profit. The longer that employees have been in a company, you can make assumptions, right? The more they know, the better they are at their job, the better they understand what we do and how we do it. They might be, if they're in a truck, they might run a more efficient branch. They might be more efficient in identifying a pest problem and taking care of that pest problem. And all those things lead you to profit. So I think the first thing that I would say to your question is taking care of people and making sure that you have tenured and happy employees. And that spills over to happy customers and high customer retention and profit. And then the second I think I would say is these things. The primary dashboard that people think about is the profit and loss statement, the P&L. But there's these metrics that drive our business that are off the P&L. Things like route density, things like employee tenure, things like customer retention by service type, right? How many one-time services do you have? So there's all these metrics that are driving the P&L, but don't necessarily show up on the P&L. And those are the things, and I answered to Grant, if you want to jump in, but when I think about driving value in a pest control company, it's focus on people and focus on the metrics that drive the P&L, but don't necessarily show up on the P&L.
I mean,
Yeah,
isn't it
absolutely.
accurate to say? Sorry, Grant, I didn't interrupt you, but isn't it accurate? I mean, when a company buys a pest control company, they really need those employees. It's like, right? I mean, they
Well,
need that work, right? Or I mean, to some degree, or no?
100%. No,
Yeah,
100%. Because
yeah.
when I think about when I started in the industry, and you said decades, and it has been decades for me.
Me too. Me too. Me too.
You know, and I've loved it. I consider this to be, my industry. I love this industry. I love a lot of the components, a lot of the people that I've met through the years. Look, at the end of the day, when buyers come to meet with sellers, one of the things that we get is, what are they going to do with my employees? Are my employees safe? Are they going to cut their pay? Are they going to fire everybody? Are they going to make them sign all this paperwork? Are they going to make them do all these crazy things?
All these non-competes.
And look, here's the answer. The answer is, when I started in the industry 30 years ago, and Grant's heard me say this 100 times, or more, the biggest thing that used to happen 30 years ago is we really had a hard time killing termites, because the termiticides, the days of heptachlor and aldrin and all those things were gone. And there was this time in the industry where termiticides weren't very good before imidacloprid and fipronil showed up. And so what you find today, so 30 years ago, everybody was saying, oh my God, we've got all these termite claims. How are we going to make customers happy? How are we going to kill termites? Because we don't have the products to do it. Today, the biggest challenge that we see, in my opinion, is employee retention and keeping trucks filled and hiring good people, right? And so the buyers will say to sellers, like, we want everybody. We want everybody on your team to come work for us. Now, they might have to pass a drug test, or they might have to pass a criminal background check, or they might have to sign a non-solicit. They might. But the message is, we want to hire everybody.
Right. And
we want
them.
everybody.
Yeah.
And we want to keep them. The last thing buyers want to do is buy a company and have the employees leave. That is a doomsday nightmare scenario. And that's a really important thing for people that are considering selling to really understand.
Grant, did you have anything you wanted to throw in there?
Yeah, I think one thing that I see a lot is there's two guidebooks or roadmaps in your business. And the first is your profit and loss. And typically people are running out of something like QuickBooks or Quickens. And then your second guidebook is, your CRM, whether that's PestPack, Field Routes, Gorilla Desk, Brio Stack, you name it. And at the end of the day, it matters less of which of those systems you choose to use and more of how you use them. And I think 10, 15 years ago, there were maybe 3 to 5 primary buyers in our industry, and we've rapidly seen the expansion to 20, 30. There's a lot more people interested in pest control companies. So the rigor that you put into how do you record and build out that roadmap really matters, because not everybody is an expert who's been around 100 years like an Orkin and who's seen every system. So having really well documented procedures and making sure you keep that data clean and accurate and you have a monthly process for fixing that data, it's a big part of what we do with clients before they go to market, is making sure all of your services are coded correctly and that we've got everything mapped out on the profit and loss statement correctly so we can have a real view into that. Because it's really easy to say, oh man, this soup tastes great, but if you can't actually reproduce it with a recipe book every time, a lot of buyers aren't going to be able to make that purchase and pay you top dollar. So I would say, like, if I was giving somebody advice, really making sure you have good processes around how you handle your CRM or your pest system and how you handle your financial system every month, and making that part of your monthly process. Just like you clean your trunks every month, make sure you clean your books every month. Make sure you clean your pest system every month. Because at the end of the day, you're going to get a lot more money for having those system clean than you are going to have for clean trucks. But everybody's got a process for cleaning their trucks, and very few people have a process for cleaning their data.
Well,
Yeah,
let's give
go
a
ahead, Mary.
suggestion here, and the suggestion would be for people listening that are thinking of selling their business and they're listening to us going, everybody's sort of heard garbage in, garbage out. So if you put bad data in, you get bad data when you look at it, right? If it's not accurate when it goes in, when you look at it, you are making decisions looking at bad information. So the higher the probability you're making bad decisions.
Right.
And so one suggestion I would make is, a lot of what we see is a seller, a business owner, the business might be doing 2 million in revenue, or it could be doing 7 or 8 or 9 or 10 or whatever, 20 or more. And the answer is usually, well, I've got this person over here that's been with me 20 years and she's part of my family and I love her, but she doesn't have any finance or accounting background, and she does she tries her best. That's great. That's fine. No big deal. And my CPA looks at my books once a year and does my tax return. Well, what if your CPA looked at your books every month? And what if every month that your CPA looked at your books, they worked with your admin to make sure that they were accurate? And when they found errors, they taught your admin where the errors were and why they happened. So as you progress through that cycle over a period of months and years, your books and your information get more accurate, and your in-house person gets better at their job, and your CPA is overseeing it all, almost acting like a CFO inside of a small privately held company, as opposed to, I've got an untrained person doing it, and the trained person looks at it once a year. Get the trained person to look at it once a month and open some dialogue and make sure that that information, to Grant's point, is accurate, very accurate all the time.
Yeah, because when these companies buy another company, right? They're looking at this group of business to fit in to the other parts of their group of business, right? So the more a company can make it kind of plug and play, right? Like you're
That's
talking
right.
about the Grant and the CRM. Like we've seen this where, if they have a quarterly GHP and they have, and they may call it something different, like, Gold Shield or whatever. But
Sure.
if they have a quarterly service that can fit right into the other quarterly services that this company has previously bought, right. That's a much more attractive business. Kind of like when you're selling your house. I mean, you can have your house all nasty and cluttered with a bunch of crap piled everywhere. You'll still sell it, right?
Yeah.
But not as quickly. It's not for much money, right? So so clean your business up. Make sure your financials are in good shape. Make sure your services are structured. It's kind of like you want to sell your house or your car, you got to polish it up and take good pictures and make it look good, right? Kind of the same
Exactly.
concept.
Yeah. Just basic hygiene goes such a far way. Like, and some of it is hard work. Like every time a customer cancels, making sure you have a real cancellation reason in there. Are you always going to be able to get the customer service rep who answers the phone to get a cancellation reason? No. But should you check your customer cancels and see if they put any F-bombs in there? Yes. Like how many times have I gone through and seen where some smart Alex CSR has put like an F-bomb in the customer cancellation reason? And it's like, okay, like we probably shouldn't be doing that. You know what I mean? And we definitely don't show that data to a potential buyer. So like making sure that we're auditing our own data, especially the core metrics, to your point. Hey, do I have 10,000 service codes or do I have 50 really good ones? And that way I can actually evaluate the profitability of my GHP service instead of, oh, well, I've got one for this customer and 50 for this type of customer. And it gets too complicated where nobody can actually make, heads over tails of what matters. So I think just picking the 3 or 4 things that you really care about and making sure you track and keep those clean is kind of what I recommend as best practice. You can't do everything, but pick the important ones and go after those.
And Raymond, when you talk about like staging a house, and yes, you can hire us and we'll come in and we'll clean everything and work with your CPA and they'll clean everything, right? And you're
You'll make
like
sure the
staging
cushions
your
match
house.
the sofa.
Yeah,
That's right. And you'll landscape and paint, do all those things. But isn't it better to as an action step for an owner maybe listening to this is doing it every month while you own the business? Because what do buyers want to see? They don't want to see last month. They want to see the last 3 to 5 years. And think about the amount of work it takes to go back and try to reconstruct and clean and stage 3 to 5 years worth of administrative work because you can't, right?
Yeah.
Or you just do it now.
And they could tell. They could tell if you got this nasty looking business you tried to polish up 6 weeks ago. They can tell. Yeah, absolutely. Yeah. All right. Well, it's great. So in this industry, a lot of times it's generational. It's family. Somebody's a technician. They decide to start their own business. They're not necessarily went to business school, right? So they often run like on their instinct. So how do you help them understand that it's not just about like your gut and how you feel, that you have to kind of look at these things as a business and make their decisions based on data. So how do you get those business owners to kind of start thinking that way?
For me, I think it's about no one can do everything. So having the right advisors, you might not need a business coach, but you probably want a good CPA that you can lean on when you have questions and have an intuitive understanding of, hey, am I doing this right? If you have a Brio stack or field routes, look, there are experts at those companies who can let you know what best practices are. Hey, when I've got a commercial account that's got 50 locations underneath it, how do I put this in my system so it actually makes sense and it's not a mess when I look at this data? Leaning on the right people to answer the right questions. And I don't think you need to grow too quickly. I think I see a lot of people who want to, expand as rapidly as possible. But I think having the right systems in place are what create real value in a company. So from a financial and a data perspective, those are kind of my tips to people as they look at that. Kemp, I don't know if you have anything to add on from kind of a leadership perspective.
Look, I think the question to a listener, if you're thinking, I've got this pest control business, I might want to sell it. I own it and it makes money. So I must be doing something right. And you probably are, right? And that's the beauty of pest control. It's very profitable, it's very stable. But a lot of times, and this would be a question for a listener thinking, maybe I do want to sell it. Maybe I could do better. How could I do better? Is I am running it with my gut, right? Like it feels good. Maybe, hey, I heard everybody went from monthly pest control to every other month. Now I hear everybody's going from every other month to quarterly. I should go to quarterly, right? And so those are the thoughts. But the questions, and it kind of goes back to the metrics. What do we know are the fundamentals of pest control? And we know that one of the key fundamentals is recurring, right? So if you think about that, what does a buyer value? Do they value one-time service or do they value recurring services? Well, if you know they value recurring services, then maybe you should look at your sales by service report and you should say, 98% of my business is one-time service. Ooh, that's probably not good.
Yeah.
I need to get it to be 98% recurring. I need it to be, the value is on pest control. I need to get recurring pest control in here. So you look at sales by service. You look at revenue by zip code. to study your route density. You look at your P&L and you look at your COGS, right? Labor, fleet, and chemical cost are the COGS of our industry, right? So you got to understand, to your question of gut, running it with your gut versus running it with data. Because buyers are not going to buy it with their gut.
Yeah.
Buyers are going to buy it with data. Whether we're comfortable with that or not, buyers are going to come to us and say, here's the list of stuff we want to see. And that list is long.
Yeah.
And there's nothing on the list that says, tell me what your gut thinks of this. It's
what's
all,
your opinion? What's your opinion? Yeah, it
what's
doesn't
your
say that.
opinion of this
Yeah.
list? Well, this list is long. I think it sucks. Well, too
It's a lot of
bad.
work.
This is, if you want millions of dollars, we want information.
Yeah.
And so the question to your gut is a really great question, but the answer is you have to pivot to run it with data. Because when you sell it, the buyers are going to buy it based on data, financial and otherwise. So you need to understand the buyers want to see employee retention reports, customer retention reports, route density reports, revenue by zip code, COGS, and they're going to study the hell out of your P&L. So why not run your business that way?
Yeah. Well, and as these business owners, they're proud of the businesses they've built. They've done, like you said, they've done a good job. They're successful. They're making money.
Yeah.
But that's not what the buyers, the emotional part of it, the buyers don't really care about. They want the numbers, right? They want to look at that. So speaking of that, price increases. Now, I know that there's a lot of companies in the industry that do price increases regularly. I know that there's not a lot that don't. What do you guys? What's the deal with price increases? Good, bad? Is it good if you want to sell your company? Is it good to get in the habit of your customers getting price increases? What do you guys think?
I'll start with that one, and here's what I would say. Tell me a year where things get cheaper.
Let's see. Let me hit the pause button because that's going to take a while.
Right.
Yeah.
Right. We're back to Raymond. Yeah. Unfortunately, I think I'm older than you are, but decades ago.
Yeah, both
things
of us. Yeah, not much.
Right. Yeah. Right. I mean, I can remember being a little kid and gas was like not even $1 a gallon, right?
75 cents, I think.
Today
it's 50 cents. Yeah.
Well, so my point is, if we know things get more expensive every year, AKA also known as inflation, if we know uniforms get more expensive, trucks are more expensive today than they were 3, 5, 10, 15, or 20 years ago, ladders, pumps, B&Gs, chemicals,
health
rent
insurance
is not cheaper than it was. Insurance is not cheaper than it was. Utilities is not cheaper than it was. So if you believe that I'm possibly right, that things never get cheaper, then how do you run your business without a price increase? Because if you don't increase your prices and things are getting more expensive that you use inside your business, your margin is shrinking. And if your margin shrinks because you don't have the business discipline to raise prices, your business inherently becomes worth less, not more. And so what I would say is all sophisticated buyers, the Rentokils, the Orkins, the Anti-Cemexes, the Arrows, the Massey's of the world, they raise prices every year, 3, 4, 5%, maybe a little more some years. But why do they do that? They do that because everything is getting more expensive and they have to maintain their margin. Also, if you do not increase prices, your customers are being trained that their prices are not going to change. And when you sell your business to a company that does price increases, they understand now they have an uphill battle, and they're probably going to lose more customers because that customer base has not been trained that price increases are normal, and that can reflect in the purchase price.
Yeah, I mean, everything is more expensive. You know, groceries, even if it's not more expensive, you get less quantity. You know, they take the bottom of the package and hollow it out, right? So it looks
Right.
like the 12 ounces, but you only got 9.
Yeah.
So yeah. So if you think you're going to want to sell your business at some point, then a price increase, a regular price increase, is definitely the way to go. And what I've learned is your customers get used to it. I mean, like you said, everything costs more.
They're conditioned.
They're conditioned in their entire life. They're conditioned that they're going to pay more for stuff as time goes on. So why not just meet that expectation on the pest control side? Just, you know, do a price increase. Like you said, that has to be a lot, right?
Well, that's right. And
3,
think
4%.
about like that's right. But if in the argument, right, is that, oh my gosh, if I raise prices, I'm going to lose a customer. Look, you probably are. But if you raise price increases 3, 5, 6%, whatever that number is, you're going to get that gain. It's just going to fall to the bottom line. And if you lose a handful of accounts, that's okay. That's okay. But the reality is that your business, your P&L is going to reflect economic inflation. And the way that you offset that as the business owner is price increases. And yes, you are going to lose some customers, and you can make exceptions when a customer calls up and says, I can't do this right now, I've got these hardships. You can say, well, I'll make an exception for you.
Right.
And that's okay too, right? Because you raised it on the entire customer base, you can afford to make exceptions.
Right.
But it's very important that people understand that when you don't raise prices, you're conditioning your customer base. Your margin is going to shrink, and that will be a reflection of a purchase price if you go to sell your business. And that question, you know, and you're careful when you use the word always, but that question always comes up. Buyers always ask, tell me about your policy on price increases.
Yeah.
And they're asking that question because it's a massive consideration.
I mean, if you increase it by 100,000 and 3 customers cancel and you lose 1,000, you're still 99,000 ahead.
Yeah.
Right? I mean,
Exactly.
that's kind of the logic, right? But yeah, okay, yeah, no, that's a lot, very valuable, because I think that a lot of people are scared of price increases, and there's no reason to be, because we, like you said, we pay more for everything all the time, and people are used to it, and your customers are used to it. All right, great. So private equity. One of the things I found really fascinating when you guys did your presentation last year was you kind of did an explanation of like how private equity works and how they, you know, they buy this and they take the money from the revenue to pay off the loan. Can you kind of go through that? Just kind of give everybody an idea of kind of the basic like functionality or structure of how private equity works when they're looking to buy in a company?
I think the easiest example is just to understand when you buy something and you don't have to pay for it all up front. And businesses can be bought that way too. So if you go out and you're buying a $50,000 truck, some people write the check for all $50,000, but some people are able to use debt to purchase that truck, so they only have to use $10,000 down. And then as that truck makes a bunch of money while it's out in the field, they use the cash flow that truck is generating to pay it off. And that soups up the returns, right? Because now you're borrowing at 5%, but man, that truck can make $200,000 a year. So the return that truck is generating is much larger than the cost of the debt or the borrowing costs on the truck, and you only have to put a small amount of money up. So I think an easy example, Raymond, might be, okay, I'm going to go buy a $200,000 route, and it's super profitable because there's not a lot of overhead. So let's say it makes $100,000 a year, and I only put $100,000 down, and then I use the earnings from that route for the next 2 years, and I pay it off in a year. So I put $100,000 down. It was a $200,000 route. Next year, I buy it, pays for itself. So there's immense leverage in debt, getting somebody else to hold the risk effectively. And then also, not having to deploy that capital yourself and having somebody else hold that balance for you. So I think that's something that a lot of private equity firms are using, is there's some amount of debt involved with most transactions that we see. So they're getting bank or other lenders, specialty credit lenders, to give them capital. So that way they don't have to actually write the big equity check for the entire business. And then they're using the cash flow that the business generates to pay it down.
Pay it off. Yeah.
Similar to what we do in pest control, right? We buy trucks, we go and hire people. We don't write their check for the whole year. We pay them every
Right.
month. And I think in a lot of ways that's what they're doing, but just at a larger scale buying businesses. But they're going to a bank to get a large portion of that capital. I don't know. Does that answer your question, or does that?
No. That's exactly. Yeah. That I think that's really important for people to realize is how it works. But also, would it be safe to say, like, as the seller, you don't want all the money up front at once, right? Because you're going to get killed on taxes. Don't you want like a nice chunk up front and then maybe pay me out a little bit over time, so I'm not or how's that? I mean, what's that?
I think the tax considerations are very variable state to state, right? So like if a $5 million check depends in one state versus another state, is it a stock or an asset purchase? And I'll be the first to say that I'm not a CPA, but I think the tax considerations are very variable and it depends on your business. So we could probably talk about for 2 hours, what is the right financial planning for that? Do you want to hold a seller's note? Is that tax advantaged or not? Do you want to have the risk of having 50% of the check held up in the performance of this deal? What happens if they default and then you don't get paid back? Is that worth the 1% chance? But oh man, I'm getting 5% interest. Oh, I don't know. Maybe you go get 8% in the market. So there's a lot of things that you have to think about, I would say, when you're making that consideration that are really outside, not just the deal economics, but really like, do you have a wealth manager who's going to manage the money that you get from the sale? Maybe it'll be more profitable to get a large check today, put all of the money in the market, than it would be to hold on to your pest control business. It really comes down to so many different things that I don't think there's like a cookie cutter answer on this is the best path forward. I would say it's probably on a case by case basis, and it's definitely dependent on your state tax laws and how your deal is going to get structured.
But these are the questions these company owners need to ask, right? These are the things they need to be thinking about, right? Like what? Okay, so I'm going to sell my business.
For years in advance.
Yeah,
because like let's say you're a C Corp today and you're in California, man, are you going to get hit pretty hard? And okay, yeah, if you can do a stock purchase because you find a buyer who will do a stock purchase, but 99% of deals are asset deals. So most likely you're going to be stuck with an asset deal. And if you're stuck with an asset deal in California as a C Corp, you're going to get hammered by taxes. So spending the 3 to 5 years it takes to transition to an LLC or to an S Corp and changing your tax status could have huge tax implications.
Under that scenario alone, you would pay, generally speaking, you would be paying well north of 50% in taxes.
On everything.
So if you think about that for a minute and you put numbers on that, if you had a $10 million deal, right? You worked your whole life to build a pest control company, but you were in California and you are a C Corp and they're demanding that it's an asset purchase, you could end up paying well over 5 million of the 10 million to the state and federal taxes and walking away with 4.5 million out of the 10. So planning, going all the way back to the P&L conversations and having CPAs involved monthly that you're talking to and you're dialoguing and you're learning from. It could be, gee, I'm getting tired and I'm thinking about selling my business. And a good CPA would say, whoa, wait a minute, time out. You're a C Corp. You're in you're in San Francisco. Have you lost your mind? We've gotta call this now an S Corp, and we've got to do that for several years. And the benefit there could be worth millions of dollars.
Yeah.
So from a private equity, let me say this too for people out there that are listening. Private equity, I think, is a bit of a mystery in some cases in our industry. And if we try to peel that onion a little bit, and these are rough numbers, these numbers are moving all the time. But the numbers are that there's roughly 4,500 private equity firms in the United States, roughly. In those, there's, again, I'm going to use the word estimated or roughly, 4 funds in each firm. Again, this is average. So 16, 17, 18,000 holdings. It could be pest control, but it could also be things like pet cremation. It could be things like HVAC. It could be things like roofing. It could be things like, Grant, help me out here. I mean, the list goes on and on. It's endless. Car washes, right? And this is when I tell
Pools,
people,
swimming pool companies.
swimming
Yeah.
pools, private equity firms are industry agnostic. If they think it's a good opportunity, they're going to consider it, right? So that's what the agnostic part means. They're not just buying pest control companies. They're buying all kinds of companies in all kinds of industries. So you've got roughly 4,500 private equity firms with roughly 16, 17, 18,000 investments out there, if you want to call it that. And here's a big number, and this is a really big number. It's trillion. Private equity firms are basically have $4.5 trillion in assets in the U.S. Okay, so when you think of it in terms of why are they in pest control? Why is pest control attractive? It's recurring revenue. It's high margin. It's called economic resilience. What is that? How did the pest control market do in 2008 and 9 when we were in an economic meltdown? Pest control industry was fine.
Fine. Yeah,
How
COVID
was
too.
the pest control industry during COVID? Record numbers. We were fine. Economic resilience, right? High profit. It's what I call a very forgiving industry because of that recurring nature. You know, you can make mistakes and still be stable and profitable. And then another reason, and this is the big one that private equity likes pest control so much, is it's fragmented. Right. And what does that mean? Well, that means in the United States, just in the United States, not globally, there's roughly 18,000 privately held pest control companies in the United States. And what that really means in kind of everyday sort of language is, if you're a private equity firm, there's a lot of targets to shoot at.
Yeah.
17, 18,000 targets to shoot at. So if I'm a private equity firm and I say, I want to roll up Tennessee, or I want to roll up Florida, or I want to roll up the Southeast, there's a lot of targets to shoot at to do that. And so that's what we're seeing is, you know, and we'll see private equity firms come in and get out, which is another thing for sellers to consider. Orkin isn't going anywhere. Rentokil isn't going anywhere.
Right.
You
Massey's
know,
not going
that
anywhere.
Massey's not going anywhere. Arrow's not going anywhere.
Yeah.
Anti-CMEX isn't going anywhere. Private equity firms typically hold, you know, 5, 6, 7 years. They consolidate, and then they get their return on investment. Then they flip a much bigger asset.
Is bigger necessarily better when it comes to selling a company? I mean, if you have one
It
route that's
depends
really
the condition
profitable,
of the asset.
yeah.
I mean, it depends on the condition of the asset. If it's a big company that does fumigation, you know, that's one asset, right, that has limited value.
Right.
If it's a big asset doing, you know, we did one earlier this year that was over 90% recurring pest control.
Wow.
And they had been around for 30 years, and they were sizable, and there was a high amount of interest. They were also extremely profitable. So, you know, it depends on the asset.
Okay. So Grant, this one's for you. I think we decided ahead of time I was going to ask you this one. When you're looking at a business, what kind of data trends, financial, operational, or customer base, really stand out as either, oh gosh, this is not good, or wow, this is really great? And we've talked a little bit about some of the things that make it attractive. But what are some of the things you might look at that say, whoa, we got to fix this, or we got to do something about this?
For sure. So I like to think about distributions And a distribution is just, here are all these people, and some of them, the best example is pricing. So the first thing I like to look at is the distribution of customer pricing. Is everybody priced around the same mark? Or do we have 25% of our customers who are priced a standard deviation or way away from the average? They're really cheap. Hey, all of the new customers are set at the right price, or a lot of people are over here at $100 a service or whatever the average price for the service is. But then we've got 25% of the customer base or 10% of the customer base who is priced really cheaply for some reason. And that's the first thing that a buyer is going to look at too, in my opinion, is, are all the customers priced around the average? I think that's a good thing to look at. I think they're also going to look at year over year growth. So is the business growing year over year? And that growth can come from two places, right? It can come from price increases, but it can also come from organic growth. So units and dollars. So are we adding more services, or are we just increasing the price of the existing services? That's two different places where growth can be coming from that people are really going to look at.
Is one of those preferred? Is it better to
I think it's good
increase it, or does it make a difference?
I think it's good to have a mix of both. I think they want to see that you have some sort of internal sales engine. If you're just driving growth through price increases, it probably suggests that you have a very stable, long customer base, people who have been around you for a long time, because those are the people who are less sensitive to price increases because you have a long-term relationship with them. But I think making sure that you are growing organically, that you have a sales team, that your SEO is working, or whatever your lead funnel source is, right? That's working year over year, they're going to be interested in that, because that means when they model the business and the acquisition of it, they're going to hopefully continue to retain some of that growth, which means additional dollars, additional earnings for them, which means the business pays back faster, which means they can pay more. So I think there's maybe not necessarily a preference, but probably good to show that you have both.
Yeah, I mean, because you have to have growth, because even if you have your customers love you, eventually they're going to die, they're going to move. I mean, you're going to end up losing your customers if you're not replacing them. Yeah,
exactly.
Maybe I shouldn't have started off with dying, but they're going to go away eventually for some reason or other.
People move, right? People
move. Yeah, people move. They they do different things. But no, that's pretty awesome. Well, this is great. I think I have one more general question. I think, Kemp, this is for you. So how do you coach leadership teams through the human side of change when a deal disrupts longstanding culture? So I guess a simpler way to say that is, a company buys another company, and the new ownership comes in and says, okay, well, this is how you used to do it. This is how we do it, right? I mean, how does that work? Because the one thing I've learned in this conversation is these owners need guys like you. I mean, if they're going to sell their company, it's just like selling a house. Some people may be able to sell a house on their own, but not many. So with you guys in their corner, as part of this process, how do you help these leadership teams transition from, previous owners to new owners?
Man, that's a killer question.
Well, thank you.
I think the first thing I would say is, do you understand culture? Or do you know what culture is? Or do you know how to define culture? And culture is sort of this fuzzy word. It's a complicated word in terms of business, right? What is the culture of the business that you own? What is the culture of the business that you're selling? What is the culture of the business of the buyer, right? So the first thing is to define and understand what culture is. There's really two pieces to culture, two components to the definition. One is, what does the company value? And the second is, what does the company believe in? So, for example, and Grant, you can jump in here for sure. When we talk to our clients about culture, we do say, we may not even use the word culture. We might say, Raymond, tell me what your company values. And so typically it'll be like, well, I value my employees, and I value my relationships with my customers, or I have used the same chemical vendor for 30 years. And, that's what I value. I value that relationship with my vendors. Okay, fair enough. Now tell me, what do you believe in, right? Well, I believe I have to be profitable. I believe I have to grow at 7% a year. Well, how do you do that? I believe that my trucks should always be shiny and new, right? So it's what do you value and what do you believe in? So let's start there. And then I think, what we would coach a seller into is saying, okay, how important is it to you as our client that as you meet with buyers, because we never meet with one buyer, we always meet with multiple buyers. And so we might work with our clients to say, can I, the seller, ask you, the potential buyer, a question? And the question would be, tell me about your culture. And the question would be, okay, I've identified these things as the seller that are important to me. Employee retention, customer retention, maybe it's vendor relationships, maybe it's fleet management, maybe it's profit, maybe it's growth. And these are the things that make up my culture. So, hey, Mr. Buyer, tell me about your culture. And then if you're going to meet with 3 buyers or 5 buyers, you ask them all the same question, right? Because it's not just the buyer asking the seller questions. The seller
Right.
should engage and ask the buyer questions. And if one of those questions is, help me understand your culture, Mr. Buyer, and the seller sitting there internalizing, saying, is this a good fit?
Right.
Because in almost every deal, there's going to be a percentage of the deal that's going to be a holdback. Well, if those cultures fit, odds are the integration's going to be better. Odds are the holdback is going to come back to the seller. So I think it's very important from a leadership perspective, especially in a transaction, that the seller is very clear-minded and understands how to define a culture, understands what their culture is, and then is confident enough to ask the buyer about their culture, and they sit back and internalize the fit. So it's a killer question. Culture is a difficult subject. Culture will almost always come up in every deal. It may come up in terms of, tell me what your culture is, or it may come up a little more soft, a little more camouflaged. Help me understand how you built your company and what you value, or help me understand how you built your company and what you believe in. But these subjects are not taboo in any way. They should be discussed.
Right.
But there's an educational process of, what is it? How do I bring it up? How do I discuss it? What does it mean? And how does it fit together in this transaction? Right? So that this transaction is healthy, not only the day of close, but
3
it's
months from
healthy
now.
in 6
Yeah.
months or 12 months from now or longer, when I see my employees at church, or I see my employees at the grocery store, and everybody's saying, hey, man, it's going great. We miss you, but it's going great.
Yeah. Yeah. Yeah.
And as opposed to being in, the produce aisle and they're throwing tomatoes at you because it's not going great.
You
Right?
a-hole.
So,
Yeah. I mean,
yeah, something
what
like that.
Yeah, what got me was when you said like about the vehicles, because that's a huge difference. A company that management says, I want that vehicle clean. I mean, I never want my vehicle to look dirty on the road. Where you have some companies, they could care less. Their vehicles are dirty all the time. That's a huge difference in culture.
It's a big deal, but it's culture.
It's culture. So if you're the owner selling it and you're like Mr. or Mrs. Clean Truck all the time, and the person buying it's like, I could care less. I mean, that's a big difference for the employees, that are left behind. Yeah.
You're right. And I learned this early, and it was a very good lesson. when I started at Sears Termite and Pest Control, which is the first place I worked in the pest control industry, I started in a truck and ran a branch pretty quickly, and then
That
ran
was
multiple
decades ago, right?
branches.
Decades ago?
Decades ago.
Yeah, okay.
Decades ago. However, guess what we did decades ago? There was a truck cleaning station.
Yep.
Brushes, Sammy's, shampoo, everything, Armor All, at every branch at Sears. And if Chuck Steinmetz came to a branch and the trucks were dirty, it was going to be a long day. It was going to be a long day because Truck wanted those trucks clean because it was part of the brand. It was part of the image. It was but also part of the uniform, if you recall back in the day, was Sears diehard black steel-toed shoes. And in the branch was a shoe cleaning station with, shoe wax and buffers and all that. And he wanted the shoes clean. And this was very important. When I go back and think about starting in the industry and talking about culture, and I'm talking about Sears Termite and Pest Control a very long time ago, but every branch had a truck cleaning station on the outside and a shoe cleaning station on the inside. That was part of our culture, right? It was how we looked was part of our culture, and we should always look good. We should be clean because sometimes, we get dirty on these jobs. We should have an extra shirt in the truck to change.
Sure, yeah.
So, culture can mean a lot of things to a lot of different people, but I guess what I would challenge people listening to, if you're selling or thinking about selling or own a pest control company, is what is your culture? If you're thinking about, if you're a buyer or selling to a buyer, can you line these cultures up? Is it a good fit? Because that is going to ultimately dictate how a deal goes after close. It is going to have an influence at a minimum.
And it's going to dictate whether you get somebody throwing produce at you or saying, "Hey, how you doing? Everything's good."
Yeah, that's right.
Watch out for the eggplant. Yeah.
Yes, yeah.
All right. Well, this has been great. A nice long conversation. We might have to break this into two. I don't know. It's been great. So wrapping up, I'll give each of you guys a chance to kind of give your final thoughts on whatever you want people to hear, whether it's a shameless plug about the business or anything else you want to talk about. Grant, we'll let you go first. Youth before not youth.
Yeah, sure. I think we've talked about a lot of things, in terms of selling your business, but these are things to be thinking about, not just if you're going to sell your business.
Just to have a better business.
They're just to have a better business. And there's a reason that these are best practices, and they can be annoying, just kind of like flossing your teeth every day. But I think good hygiene starts with checking in every month on those two systems that we talked about. And those are going to help you run the business and grow the business and operate the business more efficiently. And you'll also get paid more at the end of the day. So it's kind of a win-win. So that's kind of the main thing that I like to tell people. Hey, if I'm going to focus on two things, it's going to be just having some sort of system in place where I make sure I'm checking in on this monthly, if not weekly.
So run your business kind of like you're ready to sell your business, even if you're not.
Exactly.
Right? Yeah.
Exactly.
All right. Kemp, you got any final words of wisdom?
Yeah, Raymond, the first thing I'd say is thank you to you and Carissa and Voice for Pest for having us.
Our pleasure.
We've enjoyed the relationship that we've had with you, and love what you're doing, and we're grateful because it's a value add to the industry for sure. I guess the thing I would say is I would quote, there was a long time ago, there was a book called 7 Habits for Highly Successful People, I think was the name of the book.
Something like that.
And it was Covey, as I believe was the
Stuart
author.
Covey? Yeah, I think so.
No,
not
but
Stuart.
Covey.
Stephen Covey.
Stephen Covey.
Yeah.
And so one of his principles, and maybe this is the thought I'll leave us with from our perspective, was begin with the end in mind. And I always thought that was highly valuable advice, because a lot of people, you touched on one point about culture, you've touched about running a business with your gut. But if you think about, and we've talked about private equity firms and how many are out there and what they're doing, and certainly, the big strategics in our industry that are at the top of the top 100, we all know them. Look, begin with the end in mind, and that is if the data is right, and it's pretty much been stable in my 30 years in the industry, that there's roughly 17, 18, 19,000 pest control companies in the United States privately held, right? So at the end of the day, we can't take the business with us, right? So if it's privately held, it's either gonna be sold, or maybe somebody in the family, which by the way is rare, will take it over. And you've got to sell it to a family member. You can't give it to them. So you've got a transaction somewhere off in the horizon. So begin with the end in mind, is that one day you're probably going to have a transaction. So why not run your business like you're going to have a transaction?
That makes
And
sense.
that is to look at the fundamentals, look at the P&Ls, work with your CPAs, certainly work with us. We would love that. And build your business like it might be sold one day, price increases, making sure that your employees are happy, that you have the high retention, that you have the high density, that you're selling and servicing the right things. All those things matter. And that's what I would say is kind of, even if you're listening to this and you've had your business for 20 years and you might have it 10 more, begin with the end in mind. And that is that there probably is a transaction on the horizon one day.
That makes
And
sense.
we are certainly here to help.
I mean, I'm impressed with what you guys have said. But the one thing we didn't talk about that I think is pretty clear, that most buyers are really excited about the fact that if you're using voice for pest phone system, right? So let's make sure that you make yourself really attractive.
That's right.
All right, shameless plugs. All right. Okay. Well, I think we're done. I think we're going to do a little fun thing at the end. Carissa, is you out there floating around somewhere in the
Here.
world? There she is. All right. So what we do now is just a little bit of fun. I have a question or two. Let me find it. Here it is. Okay. So because I already know the question, I'll ask it and then I'll answer first to give each of you time to think.
Okay.
So you own an island and you're going to start your own, almost like we were talking about the business, your own little civilization, whatever. You're in charge. What's the first rule, the number one rule that you start your little kingdom with? And I'll tell you mine. I want my own bathroom. I don't like public restrooms. I want my own bathroom. As long as I have my own bathroom, I'll figure everything else out after that. So first rule is Raymond gets his own bathroom, third person, and then we'll worry about, laws and rules and how we eat. But that's my answer. I want my own bathroom. If I have ultimate power, that's what I'm going to use it for.
Oh boy.
All right. So Carissa, would you like to go ladies first, or do you need more time?
Sure, I'll go. Running an island, would like to be on island time, so I would say there's like no time restraints.
So just if it takes an hour and a half to get your lunch when you order it, it takes an
Yep.
hour and a half to get
If
your lunch.
if you're living on an island, yes, that's the
Who cares?
mentality.
Right.
Exactly.
Yeah. That makes sense. I like that. All right, who's next?
I think I would say that sunscreen has to be a communal property because lobster red doesn't look good on anybody. So we got to share the sunscreen.
So sunscreen shower heads just spewing sunscreen all over the
Sunscreen for
place.
everybody.
Yeah.
We're not getting skin cancer.
All right. I like it. Very practical. So I have my own bathroom. I'm not going to get skin cancer. And time is of no essence. Time means nothing. All right.
I like it. So Carissa, you made me, I'm going to do a shout out to Jimmy Buffett. And I'm going to say this is going to make sure that we have food, plenty of good things to drink, and a bathroom. I want a Margaritaville on my island. I want a cheeseburger in paradise. I want a big old margarita, and there should be a bathroom in the back for everybody to use. So
Except me,
that's my shout out to Jimmy Buffett. If we're gonna be on island time, we're gonna be in Margaritaville.
All right, we're gonna have a lot of blown out flip flops, right? Margaritaville.
That's right.
All right.
That's
one more
right.
crazy question. If there was one food that you had to eat every day for the rest of your life, every day, one food you had to eat. You could eat other stuff, but this one food you had to eat every day. What would it be?
Rice and beans.
Rice
I
and
love
beans.
rice and beans. I eat rice and beans every
Black
day.
beans, red beans, does it matter?
Black beans. Give me
Black
some
beans and
black
rice.
beans.
That's
Yeah.
good.
I grew up in
That's
Florida.
good.
I feel like that was a staple.
There you go. Yeah,
never-
that's a good one. Black beans and rice. That's good. Anybody else? Carissa?
This is hard.
Pork roll?
No.
Yeah.
I would say some form of bread because this comes up every podcast, but I'm a picky eater. So that's a reliable choice
she's the
for me.
pickiest of all picky eaters. Yeah.
Yeah.
I think I would have to say I could eat pizza every day.
Oh.
I could eat pizza every day. Yeah, every day. No problem.
All right. Here's mine. I'm sticking with my Margaritaville
I was
theme.
going to say, you get another hamburger?
You can put it in a roll. You can put it in an omelet. You can put it in a salad. You can even eat it raw. You can broil it. You can grill it. Lobster.
Oh,
There you
okay.
go. And we're on an island, so there's
Breakfast,
a decent
lunch,
chance
and
we're going to be
dinner.
able to get lobster.
And I'm
Yeah.
on
Yeah. So, all right. So I have my own bathroom. I have a Margaritaville. I can get a hamburger, or I can go over here and get a lobster. I have no issues with time, and I'm not going to get skin cancer. I like our island.
Perfect.
I think we should all visit.
I like where this is headed.
Yeah.
This is sounding really good.
All right. So we just need to go sell a pest control company to get enough money to go live on this island. And then we're good.
There you go. There you go.
All right, guys. Listen, it's fantastic. Thank you so much. This has been great. And this is I think this is probably the longest one we've done, but it's really fantastic. And I'm excited. We may break it up into 2 or 3. We're not sure. Not 2 or 3. 1 or 2.
Yeah.
But thank you, guys.
Thank you for joining us.
See you next time.